Bank stocks around the world plunged today, even as U.S. President Joe Biden vowed to take whatever action was needed to ensure the safety of the U.S. banking system after two big institutions collapsed. Startup-focused lender Silicon Valley Bank Financial Group became the largest bank to fail since the 2008 financial crisis on Friday, in a sudden collapse that roiled global markets and left billions of dollars belonging to companies and investors stranded.
The management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore.
Today, President Joe Biden detailed step-by-step what will happen next. Since SVB's collapse on Friday, Signature Bank in New York also failed yesterday, marking the third largest failure in U.S. banking history, leaving customers shocked.
I cannot believe it. This is something I did not expect.
I'm a customer at Signature Bank.
Tell me about it.
And I'm coming here to see if I have to close my accounts or not. Hopefully the bank will be bought by another bank and I can keep my accounts here. But if they're not, or if there's any question, I want to empty my accounts and bring it to another bank.
You know, it's just scary for the world, I guess, but I anticipate there'll be a lot of moving money into the bigger banks. At least that's what I'm hearing, so.
But Signature Bank has since reopened today. The governor of New York reassured those with deposits.
The banks are open. Everything is fine, calm.
The governor says what the Federal Reserve and the Federal Deposit Insurance Corporation did this weekend was important. They invoked powers to create a stopgap situation, to send out the message to all depositors that their money, even if it's more than the $250,000 limit insured by law, would be protected. What happened at Signature Bank is likely a domino effect from the SVB failure days earlier. People panic, withdraw their money, and then the bank goes under.
Reading social media and getting this sense of anxiety, and all of a sudden there is a major effect. So having this stop over the weekend was really important as far as the timing to allow the normal process to proceed on Monday morning.
Biden says everyone who had deposits at those banks can access their money today. That includes small businesses that need to pay their employees and stay open. He says no losses will be borne by the taxpayer because it will be paid for from the fees that banks pay into the Deposit Insurance Fund.
Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well.
SVB failed after chaos sparked by high interest rates led to a bank run on Thursday, with the bank's depositors pulling out $42 billion. It was the largest lender failure since Washington Mutual collapsed in 2008. Investors were unnerved by the speed at which SVB, the 16th largest lender in the U.S., was toppled by customer withdrawals. The episode last week erased more than $100 billion in market value from U.S. banks, prompting swift action from government officials over the weekend to try and restore confidence in the financial system. The Federal Deposit Insurance Corporation established a bridge successor bank yesterday, which will enable customers to access their funds today. Signature Bank's depositors and borrowers will automatically become customers of the bridge bank, the FDIC said. While depositors are safe, investors are out of luck.
Investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works.
Biden hoping this is the end of the panicked domino effect.